a sense of capital.
Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Live Earnings. Your host of today, as always, and I'm Julian, and I'm very glad to have you in. And guys, you see, I have my in-ear phones currently attached to my ears because I quickly want to check if sound and video quality is on the expected level of you guys. Okay. It looks good, I think, and I can already stop. Switch off the technology, put it away. And so we can start to dig into today's live earnings stream. And what we cover today is a company where about you are very aware and well known of, very likely, which is HIMS and HERS, the digital doctor shop, pharmacy and medical products provider out of the US, strongly getting focus and spotlight in the past quarters and months. Hi Long Mover man, thank you so much, and very glad you joined as always, man. Very loyal guy over there, and thank you very much as well for supporting me last week while basically adjusting the equipment. Yeah, so no, I think it's actually finally working, as you already confirmed. However, guys, so today we will cover HIMS and HERS earnings results Q2 2025, the second earnings results for me for the season. 3 more will come in the future. Before we jump into this company, a quick brief introduction talking about it and then focusing the earnings results. I just want to address a quick disclaimer to you guys that in the upcoming minutes that will be not financial advice, consultation whatsoever, and there's no guarantee for correctness of the provided data, guys. Yeah, so make sure you do always your own research, due diligence, and make your own decisions, because at the end it's your own money on your own future. Yeah, so that's very important, guys, especially the guarantee for correctness of the information part. Sometimes I'm a human as well, you know, and doing mistakes. Yeah, so check the numbers. However, guys, so what is the company we're talking about today? I think I don't need to introduce you too deeply to it. You can see, I mean, it's basically a platform, a website with HIMS and with HERS. I mean, of course, there are applications for your smartphone as well. So you can purchase through the website products for males and females. But before, you can have a digital call, for instance, or digital chat with a doctor, getting a prescription, and basically going through this digital pharmacy and getting your products you need to basically solve the issues you are confronted with. And a lot of those products, at least on the legacy business, are the ones who you don't want to publicly talk about, like sex, hair, skin, anxiety problems, for instance, where you want to step up your game. And the same here in HERS part as well, sex part as well, hair, skin, and you can see here as well anxiety, for instance. But of course the big banger in the past quarters was definitely the GLP-1 compounded weight loss products. No matter if you talk about for HIMS or for HERS, but I assume the demand and the overall sales volume of the HERS part is way higher. That's the part I don't want to add too much color about how everything happened. You know it very likely, the FDA, there was a bottleneck existing in terms of production capacities of Novo Nordisk and Eli Lilly. So other players like, for instance, Roman or HIMS and HERS had the chance to provide their products to the market legally. And even now, by doing this through a personalization clause, let's say it like this, it seems like it's still manageable. And basically, guys, that's it. And now I take a quick zip. It was a long weekend, that's the reason why my voice is a little bit hurt. But now we will start to actually really talk about the results. But before we jump in, and I already checked obviously the results and I know what is the aftermarket price. However, I still need to put it on because especially for you and for me, actually, I let it customized in Asia, I think. And that is my I hope the sound is not too disturbing because my microphone is actually directly attached to it. Let me know if it's not working well. But this is my this is my HIMS 10X chain. Yeah, I hope you can see it in the right direction. Obviously, it's not worth that much. Don't worry, guys. I'm not getting ridiculous because of a bit profit I made by HIMS and hers. However, as I mentioned through Instagram and through the community post function at YouTube, last week I made my first clean, secured 10x sell. So basically, I multiplied 10 times the original investment I did, and so that's the first chain. I hope we can add later on maybe another 0 or even 2 zeros. We will see. And let's see how we will keep this on other stocks in the future. But really, I thought it's time for this chain. And so, guys, maybe I'm ridiculous, not 100% sure anymore after I received it actually right now today. But yeah, so I promised to myself, no matter what will happen today, I will keep it on. And yeah, guys, well, I hope I'm not retarded. Thank you very much, Edith, 100% respect, and Long Ram when respected as well. The chain is a bit too long. Maybe I need to shortcut it a bit, or I need to train to get a wider neck, because you can see if I get closer, you can't see it anymore. However, guys, now we set the focus on the results. That's way more crucial than this chain actually. So let's jump into them. I mean, you can see here when I share the screen of my browser, I opened the cover letter, I opened the press release, and I originally actually copied the results already in the, I think for you, well-known Excel sheet, as you can see here. And you can see everything is filled a little bit more. Company specific details. Oh, cross margin. I missed cross margin. I will add this later on. This happens if you set too much focus on the chain. Yeah, maybe a BS idea. However, and of course on the top and bottom line growth. Yeah, and so let's start to dig into the details. And I'm very sure you're already checking the price development, and you know what is going on. And I would love to basically show in this call different results. I not checked all the details actually, and of course I didn't read the through the full cover letter. That is what I will do during the ongoing week. But on the first glance, when we start already with the top line growth, so with revenue, you can see here was the forecast. It was roughly $550 million for the past 3 months, and the actual revenue which they achieved was $545 million. So definitely a miss by roughly $5 million, a bit more actually. My personal target was $564 million, so definitely a 15 million beat. Why? Or 40 million, because you can see here 1 year ago, Q2 2024, they beat their expectations, the forecast by $14 million, and I want to see that they, on the absolute scale, they can keep this momentum, even though, honestly guys, it was clear that this will be a challenging and demanding hurdle basically, or barrier, because we all know the GLP-1 situation, and management didn't taught any fairy tales in this regard. Yeah, so actually not that surprising, but of course we want to see they cover the results. But of those of you who checking, for instance, the website visits, the app visits, the credit card payment volumes, there was already some indicators existing and might be getting very close in terms of covering the revenue results, the forecasts. And yeah, you can see they missed. Yeah, so they missed the actual forecast, and they missed even my always a bit higher position target. So there's for me no doubt actually and that makes it at least a bit simple to grant in this regard negative revenue evaluation. And that's actually, I think, the first time since I'm invested in this company. I think 2.5-3 years ago. I need to check it, but as well my first Live stream here was about HIMS and HERS, same actually. So first time really they missed. It's a very unknown feeling. And actually I checked the price development after market price, after closing price, and it was just like 10% or 7% down. And it was surprised because I expected already, because just of this aspect, I expected that the short sellers and the overall market, they will push it down way more. So I can live with the so far price development, even if I would definitely prefer that the revenue results looking a little bit more positive. However, let's step on or go on and check the earnings per share. And you can see EPS was $0.15 and they achieved and they beat it by $2 with $0.17. And my target actually was exactly the same. And why? I made it very simply. Basically, I wanted to see more or less the same beat level like they did 1 year ago. The same with revenue. You know, I'm a simple man, not really a genius. And that is how I approach to it. And you can see actually I made it happen. I mean, it's when you look into the details, is a bit less, but yeah, if you make it clean, the numbers, you can see it's more or less $2. That doesn't mean it's for me very positive, because for a green statement they would receive, if a positive one, if they really achieve a higher, stronger beat than my actual target of $0.17. And based on the fact they just made this level, but not really crush through it with a lot of momentum and go far behind it, for me it's just yellow, and not even a very confident one. Yeah, so it's almost a bit red touched, honestly, guys. Even though it's a beat, I know. Yes, however, so I mean, guys, so far, not gonna lie, that doesn't look that convincing and appealing, and however, but it's not a complete no-go, and we will talk later about this, because why I think that's the case, guys. Yeah, okay, guys, so let's go on. So maybe no advice or whatever, yeah, but wait before you sell your shares. At least I would do it, but of course depending on how dependent you are on your money of this investment. Yeah, if you need it to live and buy some food or not, let's say it like this. Yeah, but I would not invest any cent in this, even in HIMS and HERS, if I need this money to live and go through the day. However, now we check a little bit more the details. As you can see here, the past 8 quarters, so this quarter and 7 more, and then we have always here in the back the year-on-year development, always Q2 2025, so this earnings results, and we of course have as well the past quarter year-on-year development. So try to remove a bit the seasonality, but at the same time see if the growth, for instance, getting more flat or re-accelerating. That is what we want to see here. What is the indication? So, and revenue we already covered, so we set the focus on subscriber level. And I mean, subscriber level is a really essential number for sure. I mean, I love revenue growth. Everyone who's a loyal follower here in the stream knows that I'm most of the time revenue growth focused, not profit focused. And even if other details are positive and revenue is not developing that great, that throws a strong shadow on all the other details, basically, of a company and their results. But in this case, really, if the subscriber base, so really the fundament of everything and how they can do upselling, cross-selling in the future, no matter what kind of products and services they will launch in the future, if the subscriber base is loyal and is strong, that really shows very strong indication, very positive momentum from my perspective. And so that is actually for me even more important than revenue growth. And let's see what is going on here, guys. I mean, it's already a higher number, obviously, than the past quarter. And we can see past quarter it developed year on year by roughly 38%, now approximately 31%, so definitely lower. But yes, we're talking about a high level, yeah, really high level. And from my perspective, I mean, I wanted to scratch the valuation part of HIMS and HERS, but I keep it out because I always keep it out. But I mentioned it just one time, based on my calculations at least. I don't think that HIMS and HERS is massively overpriced or something like this. Yeah, I mean, obviously there will be a reset. It can't grow to the moon. Yeah, and especially with this kind of strong short rate. But still, I think when we talk about just keep a bit in mind the valuation of this company, 31% subscriber growth, and actually you see it here as well, 73% revenue growth. Yes, it's not almost 100% anymore, but still 73%, so definitely a ultra high growth company, very solid, and subscriber base looks as well okay, but really for me actually just okay, especially when we compare it to this 38% of the past quarter. Again, it's not really negative, but as you know, very likely, I'm a strict dude, you know, and I'm very strict. I try to always be strict about the verdict and the evaluation I grant here to the different details. And for me, this jump down from 38% to 31% is it's really hard to say, because I mean, we know the GLP-1 situation. We know that many new subscribers joined because of this, and still they can make happen 31% growth even without that much GLP-1, very likely at least. It's actually not that bad. It's a difficult one. It's a difficult one. Really, it's a difficult one. Let's see what is the absolute number, the absolute development. I want to see how it is, how it was 1 year ago. So roughly already 1.6 million, and we have here as well 150,000 guys. And another 160 and another, okay, here it was already good, but just roughly 110, then it accelerated, quickly, and then what we have here, 201, slowed a bit, and now we have, just, wait, oh man, it's too late. Damn. I need to really calculate this. 73,000. Okay, that's really on absolute number. That's not enough for me. That's not enough for me. And so, quick and dirty, guys. Negative rating. Oh, HIMS and HERS. What is going on? Yeah. It is how it is. But now let's see what is going on with the revenue per subscriber. I mean, in the past, I always wanted to see some upselling, and cross-selling. So basically, they're selling more of the same good to the customers, or they're selling more different products, additional products basically, to the existing customers, for instance. Yeah, so someone is looking for a hair loss product, and then he sees, they have some nice skincare products. Why not putting them as well in my basket and purchase them? That is basically cross-selling. And I think Andrew Dudum and in general the management, they stated in some calls in the past, up and cross-selling is not really the focus. And honestly, because of GLP-1 and the high price of those products, revenue per subscriber is really difficult to catch. However, we still want to see it's getting higher, obviously, but again, it's extremely GLP-1 driven. Yeah, I mean, if a high stake, a high share of their sales resulting out of GLP-1, and GLP-1 costs per month $200 whatsoever, it's obvious that the overall revenue per subscriber in the quarter increases compared if they're just selling some skincare for whatever, $20 or something like this. Yeah. If you hear an awkward sound, that's again my dishwasher machine. It's always at this time actually. I'm not sure what is going on, but it is how it is. Okay, let's see what is going on here with the year-on-year development. And we can see it past quarter it grew by 42%. Now it grew by 32%. Yeah, so that's very likely the effect. Not that they're not doing cross-selling or upselling. That's the impact very likely because of lower GLP-1 sales starting to taking place, and maybe even more competitive sales in general. And you can see it's definitely lower than the past quarter. Look, guys, not surprising, but I need to take what I got here. I'm just working with the facts, and that's again a simple one for me. Revenue per subscriber is negative. Okay, guys, let's go on with my 10x HIMS and hers chain, who brings me so much luck, guys. I can only recommend you to purchase by yourself a 10x chain because it makes so much sense. Irony off. However, personalized solution share, you can see it here. And as you know, a lot of this GLP-1, at least nowadays, is basically personalization driven. Yeah. Again, a lot of goods, they try to roll it out as personalized goods, as products. So basically, they are more individualized on the specific need of the patient, of the specific user or customer. And I mean, that is definitely as well a moat, yeah, so something which protects them to competitors, because you can't order at your ordinary pharmacy store or at the ordinary online pharmacy your personalized good. You know, that's very special here at HIMS and hers. And let's see what is going on here. And I mean, we're talking already about a high level, but you can see past quarter 25% year-on-year growth, now 22%. Again, that's likely very strong GLP-1 weight loss driven. But you can see it's still developing nice, and it's just very regular that it's getting more flattish. And even though 2% quarter on quarter doesn't look that great, for me it seems like that the other products next to the GLP-1 products, they're still developing very positive in terms of personalization. So for me, yes, the jump is not that great, but again, they go getting closer and closer to the ceiling here, and I actually appreciate that it's still getting higher. I expected it would get lower, but it's not a crazy move. It's not a crazy move up there, but as long as they get up, I will grant it for sure at least a neutral rating. I already have the tendency to grant even a positive rating, but you can see in the past the jumps have been just simply higher. Even I think Q3 I think was without GLP-1. Not might be the case. I think it was. When was it released? Like June, July, something like this. Am I right? I'm not 100% sure, guys. Yeah. However, I think the 20% or the 30% was definitely without GLP-1, this jump. Okay, guys, however, I think that's okay. The neutral rating is deserved at least. Okay, now let's check out what is going on with the cross margin. So I forgot to, I hope I can find it quickly. Okay, that looks good. 76% as you can see here. Okay, and let's go back. And don't get nervous because of it's way lower than 1 year ago. There's as well a simple explanation, and it's the same reason what I will state during the whole evening multiple times, because it's actually GLP-1. So 76%. And I mean, you can see really perfectly, you can feel the curve if you are a bit into it. I mean, you can see past quarter it was year-on-year growth was actually a reduction by 9%, and now it's up 5%. Or no, it's down by 5%, only down by 5%, let's say it like this. And you can see it was higher in the past, and then it went down, down, down. And again, why? Yes, because obviously GLP-1 sales. Yeah, so HIMS and hers are not the premium vendor of those solutions. That's actually the truth. They are not the original manufacturer. They are providing compounders, very price competitive compounders to price sensitive customers. Yeah, at least part of them are definitely price sensitive. And so when you dump a bit the prices, obviously the margins suffering underneath those activities and the strategical decisions. And you can see it went down because again the share of weight loss cells increased, and now it's less weight loss cell anymore, lower amounts overall. So again, gross margin is increasing. Yeah, it's still lower than 1 year ago, but it is re-accelerating. Look guys, I give it a green one. I mean, the absolute number is good with 76%. It's re-accelerating. That is at least something positive, honestly guys. And I was already here with personalization share between neutral and positive, but decided for neutral. So this time I decide for positive, even if I'm again between neutral and positive. Okay, let's take a look at our basically expenditure, the cost structure. We have here general administration, strategic position, so really the costs, the fixed costs basically to keep the company working. And you can see past quarter, year on year, it was reduced by -4%, great actually, and now still by 1% down. So I assume there might be a kind of seasonality existing, but who knows, maybe they hired a lot of staff and that's the reason why this cost increased. Might be the case, guys, might be the case. Would not be that surprising. You can see it's definitely higher than past quarter, but there seems to be kind of seasonality existing. You can see it went Q4, Q2, Q1, Q2, it went down and then again up and then down. And let's see how this worked here. So down and then up, and so again very likely next quarter down. Again, yes, it went up very strongly with 4%, but at least it's lower than past year Q2, as you can see here again by 1% compared to this 12%. But guys, I still can't see it that positive, or don't see it that positive, and here again I will take it negative. I want to see that they're getting more efficient as a company, the overall structure, the staff structure, all of this. And that's actually not the case with those 12%. Yeah? So need to be strict here. Might be something behind this. Check out the earnings call. Andrew and his team will definitely add some value to this and information to this, and then you have a little bit more color and can do your own interpretation basically. So technology and development, let's see what's going on. I mean, they have their AI platform and database to really collect all this personalization, medical, receipt, whatever data, and granting the clients, the patients, the best service available. And I mean, at least only for this already, I mean, as well they have some labs, yeah, but already this very likely costs a bunch of money, yeah. And this is at least what you can see here as well. And you can see past quarter it went down by 1%, that is great. Now it went up by 1%, that's obviously not that great, but again, if you do acquisitions and purchases and investments, it's quite regular. However, it's the highest number in the past 2 years. That's the fact, yeah, and that again makes it very simple for me to grant a negative rating. I do need to drink a lot of water because of my throat and the weekend. And actually I wasn't in a club or something like this. I'm getting too old for this shit. Shit is the wrong word, the wrong vocabulary, sorry guys. But yeah, for this kind of experiences, at least often, yeah, that was not the case. Sometimes you get throat pain even without this stuff. Okay, and here we have operative and sales. The expenses, and again, I mean, it went down last quarter, year on year by -3%. Now still it went down, which is great, by 1%. But let's see what is going on. You can see a lot of 14 and 13%, 12, 11, always double-digit number. Now it's back to 12, so it's increasing. Yes, it's still down by 1% compared to a year ago, but I want to still at least see that it's staying stable. That's again not the case. It wasn't before, it's not here. So it will actually not change anyhow that much and impact the overall rating of this expenditure perspective. But yeah, I can stay here consistent basically. And now we have here the marketing expenses. If you are experienced with HIMS and HERS, you know very much that there was always this kind of marketing flywheel promoted by the management, and a lot of investors, or let's say doubters, actually not investors and short sellers, they had strong concerns and doubts in regard of that they are not a marketing company, basically, that they're just buying their sales, their revenue by investing a lot of money in marketing, in whatever, Kelski, how is it called, Kelski or whatever, this football player from the Patriots, for instance, did promotion in the past, a lot of big names, and through a lot of channels they launched ads, and I think all of this has changed. I mean, it's not about anymore if it's a marketing company or not, because even if it is, it's still working very well, and they seems like to have a very loyal customer base. Yeah. So, however, we want to see it's getting lower, and let's see what happened. So past quarter, year on year -8%, now -6%. Still a good jump compared to the other expenditure types. But let's see. I mean, 50%, 54%, all of this existing, and that's 40%. I mean, it's the second, by far the second smallest in the past quarters, in the past 2 years. A bit higher than the past quarter, but yeah, man, I think competition is as well existing. Again, there are players like Roman, or even I think today a company or a platform like Noom launched some cheap GLP-1 compounded products, and marketing is still important, yeah, to maintain this moat, this barrier between you and your competitors. And yes, it's okay for me. That is actually okay, because the rebound 1% up compared to that it was before 46%, it's completely fine for me, yeah, even though it's not crazy good. And now let's see what is going on with the overall operating expenses on a gap base, and we go back to the past quarter, and you can see past quarter -16% year on year, which is amazing actually, and now -7%. So still great actually, guys. I mean, they ride it, and they're still riding the GLP-1 wave, yeah, like a surfer boy, and it's not looking that crazy negative. Yes, again, it reaccelerated very, very strongly, yeah, but again, compare it to numbers in the past, yeah, they had 80% and up, as you can see here. In this range, they acted a lot of long time, and so yeah. But of course, if it goes up by how much, by 12%, obviously not 12%, 8%, obviously not that convincing, yeah. And I mean, that's just a summary of the numbers before here, and you can see 3 times red and 1 time yellow. What should be the result? Obviously, there's only one answer, and that is, in this case, a negative rating. Yeah? But maybe we will change a bit the verdict of all of this, the outcome, this development, by the free cash flow. So let's check what is going on with the free cash flow. And you can see on the first glance, I mean, if I'm not mistaken, yeah. Well, wait, maybe let me check this one more time. I don't want to do any mistake, but I assume it's the truth. But I want to check it here with the cover letter, because we have always some nice charts which illustrating it very well how development looks like. And here it is. Gray bar here is free cash flow, and you can see, okay, it was always positive in the past 2 years, and now first time negative. Honestly, maybe we should wait. I didn't blend it, but maybe I should check this quickly here. Okay, in July 2024, we announced a share repurchase authorization of up to 100 million of our Class A common stock, which can be utilized through August. Okay, as of the end of the second quarter, we had 65 million remaining on the authorization. We expect this program will give us the ongoing ability to capitalize on moments of this. Okay. Yeah, okay. Wait. Let's read this here. This one's the right one. So they can still repurchase some shares. That is what I just read in this part, but I think that's more interesting. The second quarter net cash used in operating activities was 19 million. Free cash flow was in the second quarter was negative 69 million. The year-over-year decline in both was primarily driven by temporary working capital investments and an increase in capital expenditures as we continue to invest in the level of automation and product capabilities of our underlying pharmacy infrastructure. The former is expected to normalize through the rest of the year. And I mean, guys, that is the reason why we all need to take care and not just listen to someone like me. And yeah, we need to take time for this kind of results. Yeah, I mean, it is amazing that they reinvest their money. We are here for the long run, or not, guys? Or are you just investing and speculating on the earnings results? That's definitely a difficult task and a difficult objective to achieve. But you can see they're reinvesting. They're making sure everything is going well. You know this, how is it called? Sava acquisition, all this kind of stuff, internationalization, rolling out new products. I mean, HIMS and HERS wouldn't be here where they are today if they would really aggressively reinvest their money and hiring top-notch staff members and not just some cheap ones who are just now available on the market, something like this. You know, that's not the case for this company. So again, yes, the number is bad. Yeah, I don't want to talk about this or lie in this regard, but the reason for this, if it's the truth, and I assume it's the truth, and then I like to see it, that they stay very competitive and making sure they're developing very well, then it's for me okay. However, let's go back. And I mean, guys, let's compare it quickly. It's nonsense, but you can see past quarter, it basically multiplied with the Q2 2024 results 3 times. And now it's, basically down by 245%. Not nice, not nice. It was never negative again. Yes, okay, they're reinvesting. We keep this in our mind, and that is very important. But today and now, it's just about the numbers for me. And I would love to see here a positive free cash flow, and definitely a stronger one than the past quarter, for instance. That's not the case. Again, reinvestments, maybe even this GLP-1 aspect might be as well headwind. We will never figure it out, likely. But yeah, for now it's negative. But let's see what is going on. And what is very important as well, they mentioned for the rest of the year, for the outstanding 2 quarters, it will recover. And that is important, what we like to hear. It would be way worse that the free cash flow is now positive and they state somehow, oh sorry guys, we stated the wrong targets for the full year and the outlook and the guidance and the forecast and whatsoever, and we need to adjust them. That's not nice. Nice is that, okay, that's not nice, but it's okay that they reinvest money, but they say, look guys, we can see already the light at the end of the funnel in the future, and there's definitely some hope. Yeah? However, so far negative. Let's see what is going on with the free cash flow margin. And okay, guys, it's negative, obviously. Yeah, so that's as well very negative. Let's see what is going on with the shareholder orientation, how I call this at least. Yeah. So are they really taking care about you and me, the people who are investing into this company through the public trading market? And I mean, is there a lot of dilution going on? So basically our shares getting are less worth and than compared to 1 quarter ago. That is what we want to figure out, and let's see what is going on. I entered the stock-based compensation expenditure, and we can see here it decreased past quarter by 2.3%, and now it increased by it decreased by 1.1%. So I mean, historically, let's check it out. It was above 7%, a lot of time in the 7% range, yeah. That was again my dishwasher, guys. And then it went down, the company getting more efficient, and free cash flow is working, all this kind of stuff. So they have been organically strong in terms of the financials. I think they wasn't required, but now they need to go a bit back, need more money likely to pay the stuff with shares. Yeah. So we have the 6.6%, even though it's lower than Q2 2024 by actually 1%. Again, it's increasing very strongly, and it's the strongest one since the past 12 months. Something what I can't accept as an investor or state as good, let's say like this, even though it might make sense. I don't like to see it. And therefore I rate it negatively, even though 6.6% is not the highest one. Just check my dishwasher. Yeah, that's how small the world is. Yeah, maybe it was your dishwasher, and it's a very loud dishwasher. I'm not sure where you're located. If you're located in Leipzig in Germany, I don't want to state exactly the street where I'm living at, but maybe it was yours, and I heard it actually with my sharp ears. But actually my ears are not working that well anymore, so it's very unlikely. But hopefully your dishwasher is going well, yeah, doing well. However, guys, and so now something very important for me, yeah, and which balance a bit all of this stuff here out. I mean, likely the management, good management, has excuses and reasons for all of this when it's negative, yeah, and all of this when it's positive, yeah, that's their job. But I mean, facts is the full year guidance 2025. I can check as well what is going with 2030, because they granted a 2030 full guidance in the past earnings results, which looks very strong. But that's not the focus of today. More important is this full year guidance, because again we are invested for the mid and the long term. And you can see, I mean, or you can't see it, yeah. But this was basically the former. That was the full year guidance of Q1 2025 for the full year. That is what they stated. And yeah, we can check out this together, because I anyhow need to check out what is going with 2030. So we go into the press release. Go to the Outlook. We have it here. As you can see, that's the outlook for the next quarter. We already talked about this. Did we talk about this? I'm not even sure, guys. I need to check it, yeah. But more important now, 2025 full year outlook, that is what counts. And you see it remains stable, yeah. So again, here is the mid number is 2.35 billion. And it was 2.35 billion. And the same with adjusted EBITDA. Just trust me, yeah. Disregard, it should be correct. So the reason, or let's say at least this one remains untouched. So that's the neutral rating. That is actually already positive, because when you see all this red here, you could think, oh no, the world is going down. All the plans of HIMS are not existing anymore. They made a big mistake, whatever. The glass bowl where they can see into the future is not working anymore. And that's not the case. I assume they knew what is going on. Maybe they expected higher results. Maybe the wind will turn, it will change. Yeah, maybe it will get problematic. Nobody knows. It might get more challenging. Yeah, it might be the case. But that they are kind of struggling because of this GLP-1 situation, it's just simply clear. And I'm not sure what is going on with this deal with Novo Nordisk. What was the planned impact in terms of sales resulting out of this partnership with Novo Nordisk? As you know, selling the, what is it, Wegovy, semaglutide stuff from Novo Nordisk, so the original one, not the compounder good, through the HIMS and HERS website, what they actually always did in the past. And I assume some questions will definitely by the analysts get addressed in this direction in the call or after the call. And then we have a bit more information about this. But I assume they expect that they will do some sales through this Novo Nordisk partnership. And I mean, if it's getting cancelled after, what was it, 1 month? Something like this, 30, 40 days. Yeah, obviously it has an impact on the ongoing... has it an impact on the ongoing quarter? Not sure actually, but it might have in the future, and it's even more positive to see that even without this Novo Nordisk sales and partnership, they still are confident to achieve their goals and targets. And again, HIMS and HERS, based on the history, is a little bit more popular for a little bit more closer to sandbaggings, to set the full year targets a bit lower and overachieving them than to miss them. Yeah? So actually a little bit more surprising is that they missed them this time, but on the other hand, full year targets are still alive. And because we just stumbled across them, the forecast for next quarter, it's $580 million US. I want to see 586. Why I wanted to see 586, honestly guys, I need to check it by myself. But I assume it was a rough calculation what I did a few days ago. And is it the 37 maybe? Wait, one moment. Let me check what is the difference. Might be that... guys, I don't know. But the target from my perspective here was 586 million. They do 580. So even this is not that positive for sure. Yeah. So it doesn't change anything. It still stays negative, the overall rating. No matter if you take a look on the revenue or on the forecast of the next quarter in terms of revenues, on the current revenue result or the future one. But it looks a bit for me that they're calculating with very strong results in Q4. It might be the case that Q4 2025 results are expected as very strong ones. And again, guys, 580 million is... okay, I know why it's 586. I have it. Because they achieved it in Q4 2024, Q1 2025, so past quarter, and I want to see that next quarter they come back to this level. And actually they don't do it. Yeah, so it's still a bit lower than past quarter because again this GLP-1 sales are missing, or part of it is missing. Yeah, but still I think 580 million is solid, and then afterwards will be in Q4 2025 likely a new record year, a new record quarter in terms of revenue, and maybe even in terms of earnings per share. So let's see, not that negative. Okay, what I wanted to check as well is the full year guidance for 2030. Let's go back. Let's see if here's anything stated for 2030. Not in the press release, not in the cover letter, so I assume everything is stable in this regard. Yes, guys, and I can already start to do my verdict, and then we check what is going on at Seeking Alpha. So the first market reactions, I want to see what is going on, how people are commenting, setting comments, what are their thoughts are, and maybe we go quickly as well through the cover letter, or if it is available, but I don't think so, the presentation slide deck, I think that's not available. Yeah, maybe we go quickly through the cover letter afterwards, but very, very quickly. Okay, guys, so catching everything up, summarizing it, putting it together in a nutshell. So what we have here, revenue negative and earnings per share is neutral. Yeah? Earnings per share looks really it looks actually quite solid, yeah. And it's not, revenue is not the worst miss ever in life of publicly traded companies. That's not the case. It's a tiny miss. Okay, I said always higher targets, and we have a very comfortable past as HIMS investors because they always achieved strong beats. Not in this case. And as you know, I mean, I am personally invested because of revenue growth of this company, not because of profit growth. That's my target. And yes, profit is, I mean, we are between red and yellow, but when we are between this, and as you know, again, more crucial for me is revenue development, and revenue is red, then this counts more. So top and bottom line growth, this part, these superficial numbers, very company unspecific numbers basically, when we talk really about the sector they're active in, these are negative. That's negative rating for me, yeah? And now we have all these other details, these ones we talked about a moment ago. And again, not looking appealing, guys, not convincing for me. Yes, cross margin reaccelerated, but that's just logical, again, because of the lower GLP-1 sales. But everything else is somehow awkward and negative, more or less. Yes, two lights, but negative. So overall, again, negative or red. And then we have the full year guidance 2030, no information to this, but this for me is a very impactful, important information. Yeah, I trust the management, otherwise I would not be invested in HIMS. And if I see, okay guys, they're stating that full year guidance remained untouched, we don't need to have any doubts or concerns in this regard, I trust them, and I think that's very positive. Actually, maybe I should, they're not adjusted it positively, but at least they keep it. Yeah, that's the reason why I put it in neutral. They need to accelerate, then I would grant a positive rating, but now they just keep it. But in this regard, actually, it is kind of positive, yeah, because it would be very negative somehow if the guidance would be bad and the future doesn't look promising, and that's not the case, and that gives me a lot of, let's say, hope. And therefore, even though the overall rating, because of all this red stuff, red, and a little bit yellow, I still, and honestly guys, I didn't expect that will be the case soon and not today. Yeah? Even though I didn't expect a strong quarter, but I expected a solid quarter. However, yes, there are reasons, but just based on the numbers, not convincing, especially not for this not crazy cheap company, for this company who developed in terms of their price very strongly, for a company who are confronted with a lot of short sellers and people who are interested at the stock price getting lower, and based on the past this company had. Yeah, so I need to be strict here and grant a negative rating. And still, guys, I mean, it's 40% of my portfolio, and I'm not crying because I think there are reasons. I think they are well prepared for the future, and latest in Q4 I expect we are back on track, and maybe we will even forget a bit this GLP-1 part, which I a little bit behind the curtains I hope for. I always hoped that it's not getting defined, this company is not getting defined that strongly on GLP-1, but it was obviously a right move to do it by the management. However, the reputation is that it's very GLP-1 weight loss driven. It is how it is. Lawnmower Man, you mentioning we will all be selling hot dogs in the corner soon. Might be the case, but could be still worse, could be still worse, and maybe we even start by doing this with a new franchise like McDonald's, maybe it's a new business case what we will do. Who knows? And then other analysts will check our franchise, our company, our publicly traded shares. No, but whoever, I don't see that negative. It's a negative rating, negative results for sure. I would check in the moment the price, and as I mentioned before this live stream, it was something between 7 and 10% down, and I expected it would be way more. I assume because of the outlook and maybe good reasons for this results, and it was kind of expected because of certain or various indicators that might be the case. It's not crazy surprising for the market, yeah. And considering the run of the past weeks of the stock price, 10%, guys, is actually quite healthy and natural, not that negative, yeah. However, the verdict today is first time negative and red for HIMS and HERS. That's the case. Okay, and now I will go on, take a sip, show you my unlucky, unfortunate HIMS and HERS 10x chain one more time, and then we go on and check out what is going on with the first market reactions. Okay, we can see now it's a bit lower, the price by minus 12%. Would not surprise me if it's even more lower tomorrow, at least Europe tomorrow. But however, let's check out what is going on with the results. And here we have 13 comments and reactions by other investors. Guys, I can strongly recommend you to join Seeking Alpha as a user. I am not related to them anyhow, but I really like this platform. That's the only platform actually I'm paying for, and I always enjoy it. I get a lot of information out of it, and as well some insights of the market, how other investors and analysts thinking about. And that is what we will exactly do in a moment, right now, or right now actually. So long run, man, I'm completely with you. I think the long-term guidance is still solid, so no panic. And that is, I think that's really the anchor basically, which grants stability in this regard. And yeah, I can definitely sleep well. Yeah, there's no need to worry, I think. If this will get adjusted next quarter, or if the information which is getting provided by the management are worse in the earnings call right now, then I would think different, but that's so far so good. Okay, let's see what is going on. I honestly expected revenue a lot higher, but the long-term teaser remains the same. Great company, yes. And again, we should never forget what they accomplished in the past quarters, and this can't last forever. It's not healthy actually, guys, yeah. So there's not every company is Nvidia, let's say it like this, yeah. However, first miss, I believe, since going public, that might be the case. First miss on revenue might be the case. Also first time where sequential revenue is down from the previous quarter. Not ideal when your PE is up around 100. Yeah, okay, guys, but hey, that they anyhow have a PE of positive, it's good. I mean, they're still growing by 73% revenue growth year on year, crazy. And again, if you just take a look at these subscribers, 31% year-on-year growth, still very solid. PE is not the indicator. We take a strong focus on this at the moment. At least I would say it like this. Okay, Rock and Shark telling, the gift that keeps giving. Easy short every time it gets over $60 US. This is like a $6 stock, folks. Okay. You will be burned. Other one is responding, you will be burned. Not an easy short for long term. $6 US, you're crazy. By all means, go all in on short. This is another buying opportunity this week. Yeah, I'm sharing this opinion actually. Maybe I would wait maybe a bit for an initial position. Or let's say for purchasing more shares if you have already a position. If it's initial one, maybe it's actually a chance, 12% down. I mean, last week I didn't do this differently with Grab holdings. I invested as well. I mean, I sold part of the shares of my position of HIMS and HERS and purchased Grab shares. And so far it was a good idea, I think. But I'm very confident it will recover not that far in the future. Another one is mentioning, look at the short interest. When you see something that high, you're missing something if you're long, especially when it's extremely overvalued. But hey, you be you and buy the dip. Yeah, and again, I mean, telling always, like something is bad or good, or it's overvalued, undervalued, without any evidence, without any fundamentals, all without any details. It's not worth anything. I'm not sure what this guy is even doing here, or in general discussions without this. I mean, if he explains it why it's overvalued, I mean, you can state 5 times that it's $6 worth and it's overvalued, but how you calculate it? What are the numbers which make you think that it's overvalued? And that's simply not stated here. And I mean, I do my own calculation, my valuation, as you know, I always publicate it at the end of the month or the beginning of each month, say it like this, and my portfolio update, and it's my calculation. It's not everything depending on this calculation, but at least I have a rough feeling how it is valued compared to other companies with similar or different growth attributes. And for me, it is not crazy overvalued. It might be overvalued, especially historically, and of course it's high expected it will go down again to whatever, $45 or something like this, or $40 even, because it did it a lot of times in the past. But it's $6, guys. I don't. Adif, very welcome. Thank you very much for this nice gesture and kind words like I'm a hidden gem. I hope I will stay hidden and we do this on this level for a long time, because I don't need big audience, guys. I need this kind of experience and mirror in front of me and not checking the results alone. So for me, it's always a pleasure. Have a great evening, Idif. And see you next time, maybe on the 14th of August, because then I will cover new and gambling.com. If you are interested, join. If not, all good. See you next quarter or whatever, when. But have a great day. And good luck with your dishwasher, of course. Okay, let's go on. And another person is replying, not referring to the sticker, but general market mechanics, extreme and sudden short interest doesn't typically mean bearish bets. It rather means someone is buying frenetically and market makers can't keep up with the demand of that party. But it's a really rare occurrence and hard to catch. Last time I hoped on the long train. After such a signal, it predecessed a big acquisition announcement. Was a wide ride. Anyhow, excuse my ramblings. Thought I'd share, lol. Yeah, very interesting insights. Very interesting insights, honestly. Makes perfect sense, I think. And another person replies to this rock shark revenue over 500 million, and you think it's a $6 stock. The math ain't mathing. Yeah, exactly what I mentioned a moment ago. I see what TDoc88 is writing. Growing over 70%. Subscriber growth strong, 31% roughly. Should blow past $60 before next earnings. Reaffirmed annual guidance too. Yeah, and that's what I see as well. I really think they know what they are doing. And again, maybe Novo Nordisk partnership was cancelled a bit unexpected. I never liked it honestly that much. But actually some out of you did it, because the price raised very strongly on the date of announcement. But again, the fundamentals are good. And when you, again, if you make this kind of moves to keep this momentum, that's really difficult, especially with this untypical weight loss situation. And another comment, going lower shouldn't have been so shady in the Novo deal. What means shady in the Novo deal? What kind of insights are standing behind it? Okay, let's go on. Nat Turner 1966 is telling still above the 50D small SMA of $54. So basically the technical chart development. Too early for Perma Bears to be celebrating long HIMS. Okay, I'm not too much into this technical chart analytics, build stuff. Maybe he's right, maybe he's wrong. it's hard for me to evaluate with this 50 days SMA of 54 US dollars. So I assume if it's below, then it's not good. If it's above, it's good. And he mentioned it's above, which is good. Let's hope it stays there if he's right. And the last comment here at Seeking Alpha, Tommy Irish, this company lives exclusively of pirating other companies' drugs, question mark. Extraordinary how that only earned them 40 million for 100 PE. Sounds like a very inefficient parasite. Yeah. I mean, of all of this, let's say, doubters, maybe they are short invested, I have no clue, or they're just leaving a comment. This one is, at least he has some numbers in it, yeah, like 40 million adjusted EBITDA and 100 PE. At least that is something, yeah, because the others, negative ones like Novo Deal, Shady Novo Deal, whatsoever, or this Rock Shark, that is not adding anything, yeah. This, at least there's a reason behind why he's thinking that it's too expensive. However, yeah, I have a different opinion, as you might assume already, and yeah, that's how it is. Let's see what is going on with this. What is going on with the stock price, and we can see it dropping even a bit further, and so now 12.5%. I think that's very fair from the market. Again, I'm surprised it's not. Honestly, it would not surprise me if it goes down 20 or 30%. If someone asked me how it will finish till end of business tomorrow, since the closing bell rings at the New York Stock Exchange, I would say it's more likely it's getting more red than it's recovering, but who knows. And I would not be surprised if it's like, let's say 17.5% down, or even it goes to this 25%. I don't hope it's the case that it goes down that much day on day, but again, would not surprise me that much for sure. Okay, guys, going back, and I mean that's basically it when we talk about the HIMS and HERS earnings for today. Yeah? We would love to see it more positively, especially because my jewelry here is a very confident jewelry one, I would say. And yeah, I mean, look, I do a quick thumbnail for the next video. I think that is how people act in the World Wide Web when they are YouTubers and try to make something happening. But however, I would love to see different results, more positive ones, but they are not the worst ones by far. Again, I think most of the investors didn't expect really strong beats and surprises whatsoever, and it's still very solid in general when you think about where they have been 1 year ago, 2 years ago. It's crazy what they have accomplished so far, and that's all good for me. Yeah? However, guys, let's take a look into the future, and yes, of course, that's what we can take in a moment about it, but that is the outstanding earnings results I will cover through this YouTube channel. And you can see the next one will be gambling.com, which is the iGaming and online betting service company out of the UK, if you want to say it like this, from some kind of islands, which will take place next week Thursday. Next week Thursday they will be live. And then on the same day, very likely, we're talking about New Holdings, which is basically a digital bank from Latin America, located in Brazil, on the same day, but in the evening likely, yeah, in the evening or afternoon in European time, in Eastern time, and evening in Central CT, yeah. Okay, yes, so that will be the next earnings calls. And guys, if you liked what you have seen here, even if I get a bit more tired at the end, sorry guys for this, I try to be a little bit more awake and more energized the next time. However, I hope you liked what you have seen here, and if that was the case, Feel free to like the stream, to subscribe to this channel, or follow me on Instagram. A Sense of Capital is the name there of the account, the same like here. Feel free to leave some comments. I always enjoy this. And guys, as always, I mean, it was not financial advice, consultation whatsoever. There was no guarantee for correctness of the provided data, so make sure that I entered the right numbers and I didn't do any mistakes by this or doing wrong calculations. I think it looked good, but not 100% sure. Yeah, but make sure you do your own decisions. That's very important. And more important even is health. So guys, take care of your mental as well as physical health, because money is not worth anything. This stuff here, I mean, even if it would be real platinum or gold or whatever material, and real diamonds or even synthetic diamonds, and it would be worth way more. It's not worth anything if you're unhealthy, let's say it like this, crazy unhealthy. So take care of yourself, that's more important, and of your beloved ones. And guys, that's it. We see you next time, likely on Thursday. Have a pleasant rest of the day, or great next day wherever you are located at. Felix Vetter, thank you very much for joining. Thank you very much for the compliment in terms of the chain. Thank you so much. At least that was positive. And have a great evening. Lawn Mover Man, see you again as well. Yeah, I can send it to you. I mean, not sure if you already achieved the 10x, but then you have a motivation to achieve it soon. Maybe you're already on the 100x, who knows, or the 20x. Yeah. But if you need some information where I get it from, let me know. Maybe in the future I make money out of chains for publicly traded companies. Let's see. Yeah, but likely not. Hopefully not. I want to keep doing this kind of stuff. Yeah. Cheers, guys. Take care of yourself and see you next time. Bye bye.